So guys, the other day I made a post on the channel on my channel on Discord. I gave you guys this level. I gave you guys this level at the time. So you see how price came up into this level and rejected. But unfortunately, when price came up to this level, I was already done for the day and it was already late um PM session, so I couldn't take it. So the purpose of this video is to explain to you guys on how to trade my key levels, on how we can, you know, good trading levels without me, how you guys can trade without me being around, without me telling you to pull it, the trigger or not, how you can execute trade yourself. That is the purpose of this video. I'm going to show you guys how you can trade off my key levels given to you guys in advance. So for example, right, I'm gonna let me make it quick, right? This is I'm gonna get let's I give you guys a key level for and I call it like key level. My key level is like, it's a level with many confluence, like many things lining up together in that particular zone of interest in order for me to take a trade. And let's say I give you guys another key level for support of the day and the resistance of the day, right? So all you're looking for, right, is for price. As price is coming up to my level, the level given to you in advance, let's say price comes up to that level and shoots past that level. You don't trade it. I don't touch it, right? So, or price is coming down to the level and shoot past it, like there's nothing there. That is not the trade. The trade is not valid. It's not something you're going to take. We trade over reaction of a level, like, okay, knowing that, okay, price is respecting this level. Okay, in that case, how would that going to look like? Right, if price is coming up to a key level, it's going to be making higher highs, like higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, and they hit the level. Yeah, you want to see a sort of reaction from that level, right? The minute you see something like this that breaks market structure, if you don't know what market structure is, I will really recommend that you stay off, because in order for you to, you need to understand the anatomy of the market, which is the market structure. So as I was saying, price come up to the level, right? Broke the recent low, right? Now this is where you're thinking of taking a trade. As far as coming back to that, level, making a retest or, retracement back to that level, now you're dropping down to lower time frame. As far as coming back for retracement back up, this is when you want to pull your trace, right? Once you use your Fibonacci tool, so you drop from Fibonacci from the top to the low, and the 0.618 is going to be your entry or some sort of FEG, fair value gap, breaker block, support system flip. And then you take, your entry is going to be around here, and your stop loss is going to be here, and you let the trade, play out. You can fix 2 to 1, 3 to 1. It depends on how risky, on how what your risk tolerance is. So, for example, for the downside, right, price is coming down. If price is coming down to its support, it's going to be making lower lows and lower highs, lower lows and lower highs. So as price came down to the support, you see some sort of reaction, while price can do something like this. The minute it broke the recent high, now you're thinking of, okay, this level is being respected. Now let's take a trade. Now you're going to drop down to lower time frame to look for these. As price coming down for some sort of retracement, you pull the long. The stop loss is going to be here, and you target the nearest liquidity or the opposite side of the target of the key level. Right. So I'm going to make it quick. Another example. Let me delete all of these. I'll delete this. So what I'm trying to say to you guys is, right? I'm, 'cause, 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 ' price is coming up to a level, right? It's gonna be making higher highs, higher lows, higher highs, higher lows. If price should pass that level, you don't take it. But if price comes back, let's say reacts, right? Price is coming up like this, boom, hit the level, rejected. It's just some sort of consolidation, a break of microstructure. You're entering on the retest of the microstructure break or the 618 Fibonacci from the high to the low, the 618 or 0.5%, and you target the next liquidity or the opposite targets. Or should we say price drops down to the support I gave to you guys, it comes to the support, shows some reaction, it breaks the recent high, you want to enter on the back test, and your stop loss is going to be somewhere around the low that is made, and you're going to be targeting the opposite side of the target or the nearest liquidity, or 2 to 1, 3 to 1, depending on the weeks. Now, this is how you trade the level given to you guys. You need to understand what is market structure. If you don't know how to identify market structure, I can make a video for that. Well, I believe you guys understand what market structure is, and that's why, if you don't know what market structure is, you shouldn't be trading in the first place. You should be learning what is market structure. How does the market move? The market moves in series of high. The market moves like uptrend, downtrend, and consolidation. For the uptrend, we have series of higher highs and higher lows. The high is greater than this high is greater than the previous high. This high is greater than the previous high. This high is greater than the previous high. And this low is higher than the previous low. This low is higher than the previous low, and this low is higher than the previous low. This is uptrend, right? This is uptrend. If you're talking about downtrend, it's going to be making lower lows and lower highs. This low, right, is lower than this, and this high is lower than this one. So this is downtrend. So I'll give you guys some example on the recent trade and the last post I made in the Discord. Yeah, I'll show you guys right now. The last one I made. Yeah, as you can see, right, price was coming up to this level. Well, hold on. As you can see, price was coming up to this level, right? It's coming up. Hit the level, break down on the lower time frame. Let me go to 1 minute time frame for you guys to see. Right, take a note on this level. Right? You can see the price there. So I'll go to 1 minute. When price hit my level, right, I will switch to the lower time frame and see what is really going on. For example, for this, right, as you guys can see, price was making, series of higher low, higher high, 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 higher low, until it hit the target. So when it hit here, when price got to these targets, right, you will see the rejection, and it was already late at that time, so I couldn't take it. Price break the previous low. This was the previous low, right? Before the high was made, before this high was made, before the target was hit. Then price break it with energetic move. Now, talking about breaking of market structure, you want to see a break with energetic move. You want for resistance, you want to see a big, what's it called? A big red candle that is, bigger than the previous average candle. Let me show you what I'm talking about. Hold on. Right? For these, you see that this red candle is bigger than the previous red candle. Look, is the most energetic one. This is a sign for you that, okay, this level is being respected. It's not just big, it also broke the recent low. Now, telling you that it's people that are gone with him are looking at this level and also willing to sell from here. As this energetic move is done, you're waiting for a pullback into some sort of support resistance flip or Fibonacci or FEG or Fibonacci level. If you pull your Fibonacci from the high to the low, right? You can see it came up to the 50%, which is also in confluence with the key level given to you guys. And this is where you put your short, your stop loss is going to be here. I hold the trade into the nearest liquidity, which will be here, and so on and so on. I'm going to show you guys some other example of the trade I took during the week. So let me share my screen on there for that. So now, yeah, I was looking at this level. We have a gap right here. Why? The gap is the new day because when the market opened up on ES, there was a gap down. I was looking at that and also had some, confluence that made this level a key level, right? It was the previous daily low. It was the previous day value area low. There was a gap. And at the time price was hitting that point, it was during the New York Open. So that's the confluence. Like I have four things lining up right there. So as soon as price, as you can see, price was making higher highs, higher lows, higher lows. Yeah, there was a sweep, continuation of higher highs and higher lows until it hit the target. At this time, I already dropped down to the lower time frame. I dropped down to 1 minute. Okay, as you guys can see, let me delete the drawing. So as you guys can see, right, this was the target. There was a key level. Look at the time the market was opening, right? This is the 1 minute time frame. Price was making higher highs, higher lows, higher highs, higher lows into the level. And look at this first reaction, right? This does not break market structure. This is why I say you have to wait for energetic move. Energetic move. When price breaks the level, there was an energetic move. And look at these red candles, right? It was bigger than the previous red candles. Now it's telling you price, the algorithm, the people, the big players are looking at this level as well. So now on the test, if you do a Fibonacci from this high to this low, on the test that is, confidence in this level, that will be a short entry. The shorts here, the stop loss is going to be above here. You take it to the nearest liquidity. So now, delete the drawings. I'll show you guys there. Look, example right here. As you can see, price came up, break the low. When price was coming up to this point, there was no break of market structure yet. So as you can see, price breaks the recent low that was made before the high. It was the, price breaks it, yeah. It was the low. And the retest was this 618 Fibonacci that is lining up with the key level at this time of when the New York market is opening. This is where you take your trade. You take your trade in this zone, knowing that the level is already reacting really good, and your stop loss is going to be above you, right? So that's example number one. As you can see, I was just explaining to you higher highs, higher lows, and boom. Example number two was I was looking at this. I was looking at this level. Look, this is the previous value area high. Just like the previous, previous value area high. Look, I was saying that here. Previous value area high. Look at the previous value area high marked it here, right? And during the day, as you can see, around 11 to 12 p.m. Pi was coming up to this level. And that's how I took my trade off the level. I'll show you the example. As you can see, Pi was making, higher highs and higher lows. I was making higher highs and higher lows into the level. You can see price go to the level, breaks, no break of market structure because this was a recent low and there was no energetic move at that time. So price makes another high. Look at this energetic move. Is this red candles not bigger than the previous ones? This is a sign to tell you like, okay, price is about to reverse. Now, how you're waiting for as you can see, I'm on the 1 minute time frame. As far as hit the level, what you're waiting for is a retest to enter, right? And as you can see, I entered around there. I entered there and took some profit. I will show you my execution on this. Yeah, this is it, right? I took some trade. I entered there, took profit. Also closed some at this point. Then as far as I was coming down, I see some energetic move, same scenario because it's already forming lower highs and lower lows. And I added to my position here and closed most of it down here. I hope you guys understand this. If you don't understand, you can leave me a question and just tag me on the Discord and Telegram, WhatsApp, whatsoever. You can reach me Twitter, and I will continue to provide more values for you guys. Thank you guys for watching. Don't forget to like and subscribe. Don't forget to follow me. Shout out to every one of you. Trade safe.